Hi, welcome to Traders Talk, and I'm your host Meng Hon. And today is Tuesday, and we're excited because the market has turned bullish, very bullish, and it's good news. And of course, a lot of people are actually waiting for this, the continuation of the bulls. And we'll go through today, of course, the market recap of what's happening, what has happened last week, and also our expectation for this week, so that you are fully prepared for the current weeks for trading. And of course, I will just have something like this week. We're just going to cover something more towards investing. Because last week, if you have actually joined us, we have actually covered some investing topic of buying in during bear markets, right? How to actually buy in during bear markets, and of course, that was actually you can follow back last week's chapter. Just some recap. We actually talk about three stocks: Google, Amazon, and also Apple. And of course, we also at the same time, after the show, we also did some tranching in, and I don't know if you're lucky or unlucky, because after we have actually tranched in, the market has actually rallied. Have actually rallied, and it did not give us more opportunity to actually buy more stocks at low valuation. And of course, we don't mind. I personally don't mind the market to actually continue to bottom out for a while, while I actually find more money to actually add on more stocks on my long-term portfolio. All right, great. So for those who have just joined us, welcome to Traders Talk. And of course, this is a show where we actually talk about everything about trading, the stock market, and of course, our core instrument is of course by using options, and also on and off we do talk about long-term investments. And that is also to give a bit of flavor to people out there, because not a lot of people actually just want to do pure trading. They would also want there are also some who do not like to actually trade the markets, but just go in to actually invest into the stock market on a long-term basis. All right, so let's go through the market last week. What has actually happened? Let me just pop up the so when the market is actually up, right, people, not everybody is happy, right? All right, correct. Because of course, for those who are actually not happy, is like myself, I have not bought enough. Of course, if the market has bottomed out at the current levels here, right? If it has actually bottomed out, then of course this would be the so-called last low price tranches of stocks which you can actually add in before the market actually rallies. But of course, if this is just a bear market rally, a very strong bear market rally, because the market has actually gone up about 15% from the low level to the current level here. It has actually gone up by about 15%. This to here is actually about 15%. And of course, from the high down back to this level, we are almost about, I think, about 17 to 18%. 17 to 18% down from the high, and 15% up to from the bottom. Yeah. So I mean, we are in a good way. We are in a good way because the market actually bounce off the 200 moving average. 200. This is actually the weekly moving average, right? 200 weekly moving average. It has actually bounced off here, and that is actually a uh, good indication that we may be at the end. Yeah, of course, the current indication so far on the CPI, which was the Consumer Price Index of the US, right, which was actually released last week, last Thursday, of 7.9%. And of course, that is actually a good indication for the market because the expectation was 7.9. We did 7.7. Yeah, sorry, we did 7.7 last report. And of course, let's just see. We actually came down from 9.1% in June. Yeah. So in June, the inflation has actually peaked to 9.1%. That's why during that time, the Fed was quite aggressive and quite adamant to actually continue its interest rate hike on a very aggressive basis, which basically put down the market. And of course, so far, they have actually raised they have actually continuously raised 75 basis point four times. And of course, the total hike is actually more than that. But the last four, it was actually at 75 basis point. And of course, from the last one, the stance was basically they will continue to actually hike on an aggressive basis if the inflation does not come down, and their target for inflation is still 2%, and we are actually now at 7.7% as at October. Yeah, the last month was actually reported at 8.2, the previous 8.3, 8.5, then the peak was 9.1. So you can actually see that the inflation rate is actually coming down, which I said is actually good for the market, because once the inflation goes to a level which is actually reasonable and acceptable by the Fed, then basically they would slowly start to actually reduce the intensity of the rate hikes. Yeah, and of course the last one, which is actually this year, there's actually one more rate hike, which is going to be in December. And of course, in the first quarter in January itself, I think there is going to be another one. So these two hikes would actually depend very much on the inflation data that's core, and the next one, which is actually coming out, I think, in fact, one day before the rate hike announcement in December. I think should be on 13th of December, if not mistaken. Then on the 14th of December is actually the next Fed fund rate announcement. Yeah, so that is actually another crucial CPI announcement, which will either make or break the market. Yeah, so if it is lower than expected, then of course a high chance that the market will actually continue to do Santa Claus rally towards the year end. Yeah, so that is actually good for investors to actually recover back some of the losses which they have actually suffered in their portfolio this year. Yeah, so that is actually on the interest rate and the CPI. The other one is of course the labor market announcement, and of course last week itself we actually announced slightly higher than expected. It's only slightly, marginally higher than expected. Unemployment claims. That is actually one data, and of course the other data is the non-farm employment report, which basically talks about how many additional people goes into the labor market apart from the farmers. Yeah, so mainly the service sectors. Yeah, okay. So that is actually the two key things which we actually basically watch on. Of course, the other news is actually more on the China side. And of course, if you followed us, basically, we talked in the past. Basically, there are a few things which has actually brought down the market and also the overall economy. Of course, one is the problems faced by the US in terms of inflation and the economy, and then of course the other one is actually China, and of course if you look at what happened in the China or the China side around maybe about these 1 2 weeks, basically we have actually also seen the market which has also started to actually rebound very strongly since 1 or 2 weeks ago. Yep, see, it has actually rebounded, and of course, this would actually come from several factors. The expectation of the COVID easing is actually one, which of course, once that ease, basically it opens up the entire market, right? It opens up an entire market which basically has been closed off almost 3 years. And of course, this is not only positive for the domestic economy, it is also positive for the global economy. Yeah, because a lot of what is that? Trades are actually going in and out of China, and of course, once that roadblock is gone, then again it would actually provide impetus for the market worldwide to actually rebound. Yeah. And of course, the other factor is the Ukraine war, which basically is continuing. And of course, as long as it won't erupt or become worse, then of course that side of the thing would not affect the market very much more. Yeah. So these are some of the events which we actually need to look at to see where the market is going, and basically how we would actually position our investments and also how we actually position our trades in our day-to-day trading portfolio. Yep. Okay, so coming back to SPX, right? If you look here, so we have actually had a small retracement yesterday. We had a small retracement yesterday, and actually the market was actually down by very little. I think it's only about 35 points. 35 points, not much. And in fact, I actually wanted it to retrace more. Yeah, because you see the market on the daily charts, right? It has actually. This is the market, right? Yeah, this here. Yeah. Okay, so if you look at the daily chart, no, look at the weekly first. Weekly chart here. Okay, daily chart. Okay, let's look at the daily chart. Okay, if you look at the daily chart, right, we have actually how to say give up a bit, because from here to here is actually a huge jump in just basically about 2 days, right? 2 days. I think here is basic. Last week itself, basically we are up about 5% for the S&P, close to 6% for the S&P 500. Yep. So retracement is healthy, but of course today itself we see the futures itself is actually also quite positive. It has been inching up all the way since morning, right? Since 7 a.m. in the morning, it has been actually inching up the whole morning up till now. It still looks healthy. Let's see. Yeah, it still it still looks very healthy for the futures. In fact, the futures is actually up now about S&P 20 over close to 30 points, and the Nasdaq futures is about 130 over points. Yeah, so these are quite positive, and of course, if that continues, the market would recover back. And of course, these are the levels which we need to actually look at. The daily 200 moving average here around 4,100 level. This is one level which we need to look at. Yeah, of course, this would actually form a resistance. It also some coincides around this level here. Yeah, this level here. Yeah, about 4,001 plus minus. Yeah, so this is actually the level which you actually need to watch out for, or and the 200 moving average line. If you look at the past rally, right, past rally, it actually failed to breach above the 200 moving average, which actually formed a resistance on the S&P 500. Yeah, so this is one level. The next level for you to actually watch out in case we are able to breach up above or not. Yeah, and then yeah, so this is SPX. NDX is even stronger. The Nasdaq is actually even stronger. The rally, it actually went up about close to 8% last week, close to 8%. And of course, this is quite normal because, of course, the interest rate has a bigger impact on the Nasdaq component stocks as compared to the S&P, which is basically a broader sector. Yeah. So for Nasdaq, which is actually more sensitive to interest, and of course, if there's actually a bit of positive news in terms of the rates, of course, the Nasdaq would rally more because they were also hit more before that, right? They were also hit more before that, and of course, if you look at the how much they have actually suffered, it actually came down all the way from the highs here, all the way from the highs in January, right? No, yeah, all the way in actually in November itself was the high. So all in all, basically, you see that they have actually dropped about all the way about close to 38%, and right now, they are still at the level of 30%. Yeah, so they are still at the level of 30% down from all-time high, as compared to S&P 500, which is only about 17 to 18%. Yeah, so this drawdown in the Nasdaq sector is still much more painful as compared to the broader S&P 500. Yeah, so if they rally more, it is also not something weird, right? And of course, the on the daily chart itself, you have also see a very nice how to say, a double bottom pattern here, and of course, last Friday itself, it actually closed above the high of the W neckline, which is actually good. And of course, I mean, even in our newsletter, which we issued yesterday, also we did mention that a small retracement would actually come in, which we saw yesterday, itself, before it can actually go higher. That is actually most healthy and basically a so-called textbook what is that, textbook structure, yeah, where basically the long trades can be placed once the retracement comes in. And of course, if you look at if you get a bullish indicator somewhere around here, right, then of course it is actually safe for further long trades going forward. Yep. So this is kind of nice and confirmatory trade structure. Yeah, hopefully it stands. Yeah, there's no 100%, but of course, if you look at certain indicators, then it still looks good for the Nasdaq. Yep. So this is actually on the daily chart, and of course the levels which we need to watch out for on the Nasdaq is the on above. Basically, you're talking about this level around 12,500 level, and of course the 200 moving average daily is also another level which we need to watch out for. Of course, the previous round we did not even come close to the 200 moving average before we actually went back down. Yeah. And of course, I think we are nearer to the exit of the tunnel as compared to here, of mainly because of what we have actually mentioned or shown you just now, where basically the inflation peak was at 9.1%, and then currently we are down here at 7.7%. How many months? About 4 months, 4 months or 5 months down from this level. We are almost 5 months down from this level, and of course, if this actually continues going down, then of course there should not be any so-called major issues, problems that will continue to actually bring down the market. Of course, the other things like recession and all these kind of things would actually still be a question. And we also see companies starting to actually lay off a lot of people, especially on the tech sector. Amazon is laying off just announced today they are laying off people. Facebook laying off 11,000 people. Twitter is firing everybody, including including all the developers which maintain the websites, right, until they actually created a lot of problems. In their platform, which is basically also very damaging. And yeah, this layoff would actually come, but of course, the how to say that would actually just prolong the recovery of the U.S. Job markets or the economy. Yeah, and of course, that does not necessarily mean that the market will actually continue to go down. Maybe the increase in the market may not be a one line straight up. It may take some time gradually going up and recovering. But of course, that is okay. That is okay as long as we still get opportunities to buy more stocks during this time. Because we need to also how to say save enough money or collect enough salary to plow back into the stock market and buy shares, right? If it actually goes up too fast, right, that is also no good, because we would, a lot of people would actually miss buying all these stocks at great prices. Yeah. So this is actually on the Nasdaq. Yep. So this is actually on the Nasdaq. So hopefully this would actually continue. But of course, as I said, it won't be a one straight line up. The huge upswing in the past week or this past few days would just be how to say would just be because people are scared and desperate that the market will actually do a quick V recovery, right? So basically, it might be a situation where a lot of FOMO coming in. They just snap up all the stocks, and of course, a lot of people are actually holding on a lot of cash, and also funds, and of course, this gave sudden surge in prices for most of the stocks. Yeah. Okay, so if you look, yeah, so some of the stocks like Apple, you see from here, right, it has actually gone out by quite a lot. And of course, during our show, which was on 1, 2, 3, 4, 5, yeah, somewhere here, right, we did mention somewhere here we did mention that already this is actually a good how to say a good opportunity for buy-in. And of course, we did enter just immediately after the show, somewhere between this candle, yeah, somewhere between this long candle here, and of course the price now is already all the way up here. So a good gain on the position which we actually entered, but of course no more opportunity to dollar cost average on the way down. Yeah, so this was Apple. Amazon was also the same. Yeah, so this was the this was actually the level where somewhere around 88, if not mistaken, where we went in again on one of our investment tranche, also following the method which we explained during a traders talk last week. Yeah, of course, all these things which I actually mentioned, right? I don't just mention. I actually do and implement the same as I tell you guys. Yeah. So yeah, is what I do. So I share it out. It's not a recommendation, but of course, you need to actually do your due diligence. If you find it suitable for you guys, then of course you can actually look at it and evaluate whether it also suits you to actually implement some of the things which we talk about during Trader Talk. Yeah. So again, this was Amazon slight retracement last week, but it's okay. And another one was Google, right? So Google again similar situation. One, two, three, four. Yeah. So basically we were somewhere around here, 80, 87, 88. Yeah, and now it's basically about 90, 90, 95. But it's okay. I mean, hope if it comes down again, then our second tranche would be 10% below what we have actually entered here. The second tranche, yeah, that is ours. Of course, for those who have not, and you find this valuation still attractive, then you can actually still look at I would say not at the current level. Yeah, of course, you still can do, but I would still hope to have some form of retracement coming in this week, because this week itself, I think on Wednesday is actually the retail announcement. The retail data is actually coming out, and I mean the expectation for retail, which is actually on Wednesday, CPI Wednesday. Is it Wednesday? Eh? Retail. Tuesday, Wednesday, Thursday. No, Thursday. This is Thursday. Retail data. Where is the retail data? I thought retail Tuesday. Let me see. Tuesday is today. Today, PPI. This is the production index. And then Wednesday, core retail sales here. Yep, core retail sales on Wednesday. So this basically is. I mean, basically, retail is how much people are buying. Yeah, of course, there can be two sides to it. If they say retail sales is no good, then of course they say, oh, retail sales is no good. Then basically, the the action on increasing interest rate is good, because this is actually curtailing inflation. Then it can be positive for the market. The other way that the press can actually do it is that all retail is no good, recession is coming, everybody going to going to lose their jobs and everybody will suffer. Then of course there's another way the market can actually play it. Yep. So I mean, it depends on the overall market reaction. Yep. So another one coming on Wednesday. Hopefully this gives another pullback for the market lower, so that we can actually buy more shares. Yeah. Yep. Okay. So yeah, so this is actually this week, and of course, this week there are a lot of Fed members speaking almost every day. So I don't know what they are actually going to talk about. The one who actually spoke yesterday have actually brought the market down a bit. I think before he spoke at 12:30, I think it was still okay. Maybe about 2 hours after he spoke, maybe the market digested what he spoke, and then the market actually came down. After, I think about after 3 a.m. After 3 a.m., the market has actually came down from the top yesterday. Yeah, so that was yesterday closing about 30 over points down for S&P. Yeah. All right. So that's for the market. If you have any questions, do actually put it up here. Yeah. Let me see. Okay. And yeah, what should I cover? Yeah, actually, what I actually wanted to cover today is actually very simple. It followed on from what we actually speak about last week actually. Yeah, what we actually spoke about last week. Where is this? Okay, here. Okay, so we talk about investors. Yeah, so this time we're actually talking more about investing. Yeah, so we talk about investing. Okay, here. Okay, we talk about investing here, right? So in bull market, what do we do, and in bear market, what do we do? Actually, if you ask me, right, which I will also show you, right, as an investor, basically, we do one thing. We buy good stocks at good value. Correct. We only do one thing. We only buy fundamentally strong stocks at good valuation. Yep. So that is actually what we buy. And typically, during a bull market, right? How we actually buy, I will just show you how we actually buy during a bull market. Is this? Yep. During a bull market. Okay, so during the bull market, right, the stock market is actually going up like this, right? It's actually going up like this, yeah, up like this, yeah, up like this. Okay, so the stock market is actually going up like this. Okay, so the typically during the bull market, the times when we actually buy shares, are times when the market actually retraces from its high. Yeah, this is the high. That is high. This is a retracement. This is a retracement. Okay, then we basically buy stocks at retracement levels, and then we let the market run again, and then basically we let it retrace. Then we buy our second level at this level, and then we let it up again. Then basically we buy again at the next level. Yep. So we basically buy also on the way up, and we also do what we call the tranching or dollar cost averaging on the way up. And of course, these levels where we buy, right, it can be levels based on the moving average support lines. It can be based on moving average support lines where we actually add on positions as long as the valuation of the company is still uh, below, how to say, below the intrinsic value. The share of the company is below the intrinsic value. We can actually still add on at each level of retracement. Yeah, so this is actually during the bull market. That's how we actually invest typically. And of course, during a bear market, so the prices actually comes down, goes up a bit, comes down, goes up, comes down, goes up, comes down. Yeah. So this is typical of a bear market. Then of course, during bear markets, we also can buy. Yeah. As I said, we buy also when the stocks becomes severely undervalued in the value. More so if the cases of it becoming undervalued is not because of its business going bad. It's not because of its business going bad. It's because of the overall market condition, the factors which actually creates like interest rate and all these kind of war and all these kind of things, which is basically creating a situation where it goes down together with the overall market condition. Yeah, then of course that gives more opportunity, and because the fundamentals of the business is sales, and if fundamental of the business overall is still intact, right, then of course what is going to happen after the all these things pass and the market rebounds, right, then basically we will actually see a recovery of the stock price post that, which can actually be going even higher from each level which you actually bought in. Yeah, so when you buy in, yeah, so say at this level you buy in, at this level when it actually comes here you buy in, at this level you buy in. Yeah, so these are the the highs during market lows. We buy in also at low levels again, at probably these moving average support lines. We can actually buy the shares. Yeah. So that's why as a investor, basically during a bull market and bear market, we also do the same thing, which we buy. Yeah, buy. Yeah, we buy shares which are undervalued, of course, in hope that it will actually go higher than the each of the level of prices which we bought. Yeah, so that's why last week itself, we actually covered this situation. Last week we actually covered how do we actually buy during a bear market. If you have not joined us for the show last week, go and watch the repeat on our Facebook page, how we actually tend to buy during a bear market. Yeah, so this is two situations where both we are actually doing the same thing, but the market condition is actually different. Yeah, of course, if you go to become a trader, then of course the objective is we can actually buy also during two market, as long as we buy low sell high, or we sell high buy low. Yeah, so we can actually do two sides. Yeah, so of course, as a trader, during bear markets, you actually want to sell here and buy here, right? Yeah, you want to sell here and you buy here. Yeah, so that you can actually make a profit, or you buy here and you sell here. You can also make a profit both this way. After you make a profit here, you make a profit here. Yeah, as a trader. So of course, it is not it is also not easy to find all these kind of trades. Yeah, but of course, if you are using so-called option structure, if you are using option structure, then of course certain option structure will give you a higher probability of trade, and plus giving you insurance or more when you actually want to enter into a trade at this level. Then of course you can actually enter into what's that, into trades like a bull put spread trade structure, where it also gives you additional insurance buffer. In case price continue to drop, then you still have this insurance. But of course, if price rebounds up here, then of course this trade will be profitable. Yeah. Both sides here, you can actually have some trade structure with insurance. Here also, you can actually have some trade structure with insurance if you are actually shorting the stock or shorting the market. Yeah. So this is what I actually wanted to cover. Just some basics, but again, having seen all these kind of volatilities, all these kind of things in the market, then it is also good for us to actually refresh where we are right now, because the market can actually turn from this side to this side. Then of course, if we are too used to this side, you need to actually change your perspective. Yeah, so we are actually moving from this to this. Yeah, if we continue to wait, too long for this to continue to come to buy lower, possibly it will not happen. Then of course, when the market again turns bullish, and so-called bull market is present, then of course the investing perspective actually changes from how we do it on this side to how we are going to actually do it from this side. So of course, for those who have not got used to this side, then of course you actually have to change your perspective a bit more. Yeah. All right, so that's the topics which I actually wanted to cover. If you have any questions, you can post. If not, then hope you have a good trading week. Again, watch for the market. Today market is up. If yesterday was retraced, if continue to retrace is good, then of course the next thing which we need to actually watch is the retail data coming through, and that will actually give a bit of volatility for the market, because I recall on the last retail data, was it the last of the previous two rounds, all they had actually a big impact on the retail stocks when the data and the also the earnings for the retail sector did not come too positively. Yeah. So okay, also have a good trading week. I see you guys next week. Yeah. Bye bye.